Welcome back. I'm Rocky Outcrop. This is Bitcoin Technical Analysis. Thank you so much for joining me. Now, you'll notice that up behind me, I've got the Bitcoin chart open, but it's not the one that you're used to looking at. It is the Bitcoin, well, it's the same chart, but it's got a pitchfork on there. And I thought that this is actually a great opportunity to talk about, whether or not we're going up or we're going down. It's a good way to frame it. So why have I got a pitchfork on there at all? Well, Tony in the Discord asked me to take a look at pitchforks. Shout out to Tony. Thank you so much for that. Good question. Good topic for today's episode. But this is maybe not how you expected me to talk about them. Okay, I could go down the rabbit hole of pitchforks. Okay, and I could talk about various different things. For instance, I could probably take a pitchfork here from this swing low to that swing high, stick it in here, change it around, turn it into a shift pitchfork, for instance, and see how the trend within these areas were actually, how it interacted with the sort of the upper and lower pitchfork lines here, how the price interacted with the median line on the way down, found support in around here, moved up to the upper band, moved towards the warning one, found the resistance, came back down, then jumped up ahead out of this area. For instance, could talk about that, which people might like. I could also, I suppose, talk about things like this. If I put it to there, for instance, for this swing low to high to low, which would be the last one before the high up, and stick on original and say then, wow, check it out. This came all the way up towards this zone that we had already drawn in with a horizontal line in the past, dropped back down again, and then went up to the median line. Actually, then in this bar here, touched right off the median line here, or the center line, or whatever you want to call it, went all the way down to the outer lower warning line, and then back up towards the lower line where it finds it itself now and asking questions about it. So I could do all of that as well, right? But that's that rabbit hole that I'm talking about, and I don't want to go down all that. I could do that in a standalone episode some other time. Instead, I thought that we could frame up the episode quite neatly today here by looking at this and saying, are we in the standard original shift or pitchfork, sorry. Now, actually, Tony called it a fib fork, and it's quite interesting that he called it that, because that's actually probably a better name for it than a pitchfork anyway. If I just get out a Fibonacci retracement here and draw it in, then you can see why you'd call it that. And that's because if I just drag this over to the left, you can see that at this 50% line, going from where we started the pitchfork, which was down here, up to the high there, and then down to the low, which is actually not quite drawn in perfectly, you can see that the pitchfork is constructed by taking a line here, the median line, and drawing it from the lowest low here up and dissecting through the 50% point here on the Fibonacci. So that's why I called it a fib fork rather than a pitchfork. And good, that's that. That's so, I mean, okay, this kind of constitutes an explanation about pitchforks, because that's what Tony asked for. But I'm kind of going to just fly on through it now real quick and say, well, how is the Schiff pitchfork formed, and why would it change the dynamic that we have on the charts right here looking at that? Well, if this was to be an upward trend, you'd be hoping that it would stick within the original Andrews pitchfork formation. If this actually were to become a downward trend, then you'd be looking at perhaps would the shift pitchfork be better for it. Now, how does the shift calculate? Well, it's actually taken, instead of this line here, which determines the angle that we dissect the 50% mark with, instead of it being taken from down here, it's taken from here at the 50% level or so. So I'll just modify this over now so that you can see how that changes. Go to shift, bang, and now you can ask a question like, well, it's not so much a downtrend, I suppose, at this point here, but would we be going sideways or whatever? If we actually change this over to something else, like could we ask, are we already inside one? Well, you've got the inside pitchfork for that, and we can then consider all these areas to be wonderful sort of zones to be looking at. And well, I suppose let's just kind of go with it. Let's just keep going with it for now, shall we? This is the pitchfork episode. Hi, by the way, I'm Mr. Pitchfork Outcrop. Hope you like my pitchforks. And yeah, so like, are we going to be in an inside one where you've got these lines? So what are the lines here? I'll just kind of label them for us real quick. You've got one here, you've got one here, that was in the wrong place, and you've got one here, right? So let's just name these lines for us just real quick. What are they? That's your upper warning line. That is your upper line. Actually, not 100% sure what the names of these things are. I can't really remember off the top of my head, but these are good enough names for them, right? Official lessons. So, so like, and then that continues down the way with lower, and then lower warning line, right? So at the minute, you can see that the prices are in today's price action that we've been straddling between the upper warning line and the median line. So if we move beyond this area, 11,500, then you could consider that maybe we're no longer inside of this Schiff. If we move down the way past 11,000 itself, though, then we're going back directly into this channel here, towards the downside, where you could very much easily be looking thereafter at targets such as 10,600, 10,500, depending on the timing of all these things. Perhaps ultimately moving on down to those lower 10,000s, upper 9,000s area, and even perhaps as far down as the lower 9,000s area before continuing with moving towards the upside thereafter, perhaps to then go up towards the upper warning line and break through again. Okay, let's upgrade it though, and assume that instead of it being that, it's just like a modified shift pattern. And this is just going to kind of go sideways from here, pure sideways. Then you're looking at this the modified shift and the regular shift are going to be very similar in this situation here, as you can see. So so what you're looking at here is, will we be going pure sideways with lows down there at 10,900 and highs up there at 11,700? And if we do break beyond them, what are the two areas to be looking out for? Well, let's just move these things up here. Real quick likes, and point out where the targets would be. Then just looking at these three areas for the upside, and you're talking the 11,355, the area here at 11,755, and then the upper line coming in there at 12,124. And this kind of could last for as long as we wanted it to, because it's essentially just forming a couple of parallel channels for us. And if we wanted to as well, what we could even do in terms of talking about parallel channels and whatnot is kind of just extend these things out by taking this distance here to the of one of these zones, because they're all the same size, of course, and move it down the way. And then, of course, we could be looking down as further if we're going down, if we're going to have this whole sort of setup at 10, what was this down here? At 10,134, and then towards the top side, I suppose, then if you wanted to kind of just, keep thinking along these lines, you're looking at 10,535. Okay, but what if it wasn't that? What if it wasn't like that at all? Yeah. And instead, we've got an upward trend here. Are we still inside the bounds of that? And does it still work? Well, yeah, it does as well. And again, we've got certain targets that we can look to. So, 11,300 for a daily close above that area would put us back into this zone. Now, tomorrow is going to be 11,000, sort of closer to that 11,400 area. The day after is going to be closer to the 11,500 area, and so on and so forth, in terms of how we can look at this over the period of time, and just kind of thinking about things as things go on. If things are taking a while to happen, we could be looking at it around about those sorts of, $100 more a day as we go up the way. Is that 100 or 200? 1 day, 2 days? Well, you get the idea there anyway. So if you're looking at $100 to $200 increase in terms of the minimum for a close to be within this zone, likewise towards the downside, then this moves up fairly rapidly, really, overall, even though it's a fairly shallow one. I could have drawn this in various different ways. If I move this down the way, like for instance, and go to the previous swing low over here instead, then you're looking at different sorts of a different layout. So obviously all of this depends on your sort of your perspective and how you're drawing things at in that. I've just been doing this in terms of looking, and the whole conversation, as you can tell, is really just kind of going around the basis of where are we since we've come up to these areas at 11,000. How stable are we above 11,000, and what direction could we be going thereafter is kind of the question that we're asking. That's why I've drawn it in like this, in order to frame everything around that conversation, which is the sort of conversation you'd be having with yourself, I suppose, kind of as you look at the charts. Then, of course, where could we be going on this one if we do go either down the way or up the way? Well, let's just take a look first at this and say, towards the lower side, you'd be wanting to see closes above 11,000, 11,150, 12,000, no, 11,200, 11,300, call it, sorry. 11,450, over the next wee while just to maintain this upward trend. Of course, actually, you'd be asking questions about it as well, because we've got the 236 coming in here, and it closes below that 236, obviously going to mean something in and of themselves. And there'll be various other things we can look at, for instance. So I've got the moving averages on already, but stuff like that. Then towards the upper side, if we do move up the way, you've got the central median line in there at about 11,800, and that comes in at the 786 as well. The golden pocket zone, by the way, at the minute is would be taking us up towards that median line, but over the next wee while, it's actually going to just sort of slope back down the way. And a golden pocket retrace on this could maybe just be the bare minimum come sort of this time next week at what you'd be looking for. Then and then towards the upper side, you're looking at 12,700, I suppose, maybe by the time you got up there, in terms of like where you might be challenging around that area. The next areas thereafter, depending on time and everything else and targets that you'd be looking at, you could be looking up towards 13,000 at the 1618 retracement off the back of this thing, going up that sort of a way. And you can still do the same sort of thing as well with the parallel channel type effort. If I just borrow these, I've drawn that in badly, but anyway, I'll have to make it slightly outside a bit to balance out. Can I move that there so you can see it matches up perfectly there. So like go towards the downside, you're looking at kind of like going below the 236 and talking about whether or not we're going to have 100% retrace, etc., etc. Then you'll be looking down to sorry, that wouldn't be 100%, but we'd undo it. Sorry, 0% retrace. Then you're looking down towards that 10,500. Oh, sorry. If in the next couple of days, 10,500 area, and then then if it happens next week, then we're moving outside and looking back down towards that 236 area, and then up towards the top side. What you could be looking at as well would be sort of the if we move beyond this, we'd have to look towards our horizontal lines and the 1618, of course, and all the different timings and everything of it. But you could be looking up towards that 13,000 area, and then maybe you'd find a turnaround back towards one of these areas to ask if it'll operate as support thereafter. So okay, this ended up happening, Tony. Eh? I've done the pitchfork episode. I wanted to kind of point it out and say up or down. What are we going to do? But it's evolved like this. Right, cool. Anyway, I hope everybody's enjoying it, by the way. So that gives us all a bit of perspective about the current price. Right, great, fair enough. How about we just kind of then crack on with what we normally do for a couple of minutes and then tune out and crack on with the other episodes for today. So yeah, let's do that. We're above the 21 EMA, of course. Where's that coming in at? Well, that's coming in at 10,500 if we were to drop down towards this area. And that's also where the wick of this previous low was. Going down below this would be quite dangerous in terms of the price action moving beyond these areas. Obviously, I'm just talking like I would normally anyway, but you can see now with the greater context of this particular tool on the charts how this gives us a bit more context, talking about all that. Or confluence, even if you like. So movements below that area could very well easily see us return back down towards the mid 9,000s, where we've spent so long. And if you really were to think about it, the VPVR would be coming in here with a point of control pointing right at this area as well. So that would be kind of your negative stance on that one. Of course, taking out the 618 and moving towards the top side, we have to look towards towards where the 786 is there, closing perfectly on the previous two closes over there on the 1st and 2nd of August, and saying that 11,800 area has got to be the perfect next area to be looking to towards the top side. And if we do take out the wick of this thing here up at 12,178, in terms of, say, a 4-hour closing basis or something like that, then we could be looking at things quite positively thereafter. If we were to do all this, then I'd hopefully, you'd see it happening fairly organically during normal trading hours. And by normal trading hours, I mean Monday to Friday up until 11 p.m. or whatever when the CMEs are open, just so that you can kind of cover off this thing and actually fill in that gap once and for all, if that's going to happen or not. This gap here looks to me to have been filled. I wonder if it has been or not. I'm assuming I've got a gap here marked out with this line, but we'll come back and look at that in another episode in the future. Of course, then thereafter, though, if you do see things dropping down towards that 9,500 area, what do you have? Well, you have a gap fill over here in the CMEs. So that's what to look for on the downside. In terms of the upside then as well, continuing on with all that sort of chat, taking out that wick towards the upside, we could be looking up even higher. Oh, I already talked about the 1618, but I suppose we could talk about the other levels as well. And of course, it always depends on what you want to look at as a trader. You can think about your own levels as you do this sort of thing yourself all the time. I tend to use these ones because they're the most visually accessible episode, sort of good for YouTube type things. But it's up to you. I don't always do this myself, as you can tell, but we're looking at the fibs. We're looking at the fib fork today. Hey Tony, good name for it. Good name for it. That's what it should be called, the fib fork. As you can see why. And then in between that area here, I'd be looking at as well in terms of the top side. That 12,400 area. How will that work? If we come up towards that area, have I got a couple of things on here? That's the 1414 there already. So the 1272 I've put on as well. These would be the three upper side targets if we extend beyond all of that, obviously. What shall we do now? 4-hour time frames. Look at we're below the 50 simple on this. Are we just? No, we're just above it, right below the 21 EMA. If I just, excuse me, just take all that off. Sandwich between these two areas, just in terms of the really low sort of look aspect of things, I'd be looking towards these two numbers here, of course. Then thereafter, sort of this wick here towards the top side and this one towards the bottom side. So you're looking at like 11K and 11,400 in terms of just the range that we've been in over the period of the last 16 hours and whether or 12. If I were to look back, a full day, if we call it 11,450 down towards that 11,000 area, 10,900 really actually is the range that we're in at the minute, and taking out the 21 EMA, of course, in the 4-hour time frame would be the first step you need to do towards the top side, looking at having here closed in what is ultimately a higher low in this area compared to this area with a high here. So then thereafter, your next target can easily be that 11,450 with you looking towards, putting in a higher high thereafter. Would that be happening without divergence at the time? Stuff like that to ask yourself questions down the line. Let's go down to the 1-hour time frame and just sort of really check in with what's going on at the minute. In terms of this is pure sideways, obviously, so that's why we're going down the time frames to try and find if there's somewhere we can look to for divergence. If we call this the downward trend here, this is the 1-hour time frame, like I say, so this is like, this isn't going to last forever. But if we're talking about this here, is that working for me? Not really, Maybe if I use those two wicks. I'm determined to do wicks here so I can get it to be, bigger. The wicks, yeah, cool. They're my Viagra, you could say. So let's look towards that and say, right, so we're trending towards the downside. This low here, it's not as low as that one. Bit of bullish divergence here in the stochastics. No and no in terms of that. So we're not really divergent here on them, apart from the stochastics where we are kind of, where we just ticked around, but yeah. Are we actually just trending sideways more so than trending in a direction or not? What would I put weight on? Would I put more weight on the stochastics in this particular moment? Perhaps, but this has been off the back of some really heavy trend in action. No, I don't know. Looking here at this thing though, just moving outside of this range is going to be, the first call, I suppose, and after various things like, the 1-hour time frame here, 21 EMA is just above us currently, given that we've had a move down the way, the 55 just above the candle body itself, and then that would put us in at the top end of this. So, moving up above 11,300 in terms of the early time frame could easily see the prices move back up towards those higher targets, and sort of discount this parallel channel altogether. But a failure to do so could maybe even see us moving down the way and going down towards those lower targets again. So those 10,900s. I suppose if you wanted to look at the structure of the pricing over the next wee while, you could just look towards this parallel channel here, the 233 exponential moving average coming in. Down there, will we get a death cross on these? If we move towards the downside one more time, it looks like the 1-hour time frame will get that death cross. Let's just go back in time to make a wee comparison as to how things performed the last time. So we had a golden cross over here, just after this big spike up the way. So that's how that worked that time. We had a death cross over here, and then we had a big pull down just there. Obviously all the same chat applies, or we came in and retested both the 50 and the 200 again thereafter. And again here we tested the 50 until ultimately we've come all the way up towards where we are just now, and then just kind of just retested the 200 there now. Will we see things kind of go down the way thereafter or not? These are things to look for. I hope I've given you some value to take away. So I've been Rocky Outcrop, and we've made it to 1,240 or so subscribers, and that's amazing. If you want to take part of this growth of this channel because you think that there's good value here to be taken away for you in every episode, then I'd be absolutely delighted if you hit that subscribe button and hit that like button. We talked yesterday episode about, where are you from in the world? Got a lot of good responses to that. It was great responding to people in the comments about things. If you ever leave me a comment, then be sure to know that I do read all the comments and to try and respond, to all of them. Sometimes, of course, I'll just give you a thumbs up and a heart because you're just saying cheers, but 99% of the time I respond as well. So just be aware of that if you want to say hi. And there's the Discord as well if you want to join in for some more chatty, because of course there's really, really great personalities in there. It's not just myself. So again, thanks to everybody for tuning in. Thanks to you, Tony, for suggesting this episode. I hope it's been of some use to people and giving them something to kind of, take away value-wise to apply to their own chart in thereafter. I'll see you in the next episode. My name's been Rocky Outcrop. It'll still be Rocky Outcrop tomorrow when I come back with another one of these daily technical analysis episodes.